Hey guys, welcome back to another episode. In this video we will be going through our high probability double top and double bottom trading strategy in depth and how we use it in combination with price action. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Potential of the double top and double bottom reversal patterns. How to identify a potential target for a double top and double bottom pattern. First and foremost, any potential target should first be identified using simple support and resistance levels. This is true regardless of the price action pattern that is formed. Having said that, there is a way to identify a potential target when trading a double top and double bottom pattern. It's called a measured move or a measured move objective, and the concept is easy to understand. There are two things you need to do in order to identify the minimum potential of your double top and double bottom chart pattern. First, size of the double top and double bottom reversal patterns. You need to measure the size of the pattern. To do so, connect the two tops or bottoms with a single line. Then add a vertical line to the line between the two tops or bottoms starting from the neckline. This distance is the size of your double top or bottom pattern. It works the same way with the double bottom pattern, but in reverse. Second, projecting the move. After you measure the size of the pattern, you need to apply this distance starting from the opposite side of the neckline. In other words, your first or minimum target equals the size of the pattern. Again, the same is in force for the double bottom figure, but in a bullish direction. And now, how to trade double top and double bottom reversal patterns. To trade double top and double bottom properly, you need to implement some basic trading rules. The following steps will help you identify and trade the double top reversal. Step 1. Trend identification. The first thing you need in order to identify a double top pattern is a bullish trend. You cannot confirm the pattern in the absence of a trend. Although tops and bottoms can and do occur when the market is not trending, a valid double top and bottom formation must exist in the context of a trend. Step 2. Creation of a top. Each top within a bullish trend could be the beginning of a double top pattern. Therefore, you should carefully observe the price action at swing highs on the chart. Step 3. Trend interruption. To continue with your analysis, you need to see the price action interrupting its current trend. Typically, this would come in the form of a price retracement that breaks the bullish trend line. Step 4. Creation of a bottom. After the top is created on the chart, the pattern needs to create a bottom. Many times, this bottom could be located below the bullish trend line, but that is not a requirement. Step 5. Creation of the second top. After a bottom has formed, the price action needs to create a second top on the chart. This is often referred to as the retest. The perfect double top pattern will have a second top, which is slightly lower than the first top. This indicates that the trend is at least slowing down and likely exhausted. Step 6. Drawing the neckline. The sixth step of our trade identification process is to plot the actual neckline of the pattern. To do this, you need to reference the swing bottom, which is located between the two tops. Then you would draw a horizontal line at this level. This would be the double top neckline. Step 7. Neckline breakout. The next step is to confirm the validity of the pattern. If the price action closes a candle below the neckline, we confirm the validity of the formation. Step 8. Trade entry. Since you have a confirmed double top pattern on the chart, you now have the go-ahead signal to enter a position. For the double top, you would open a shorter bearish trade. Step 9. Stop loss. You should always secure your open trades with a stop loss order. Although the success rate of these patterns is relatively high, there is never a guarantee that the trade will work in your favor. The optimal place to put your stop loss order is just above the second top of the double top reversal pattern. Step 10. Size of the pattern. Now that you are short based on the double top pattern, you need to project a possible target. You should measure the size of the pattern as discussed earlier and then apply it downwards starting from the neckline. This would be your first target or minimum target. Notice that this 10-step process works absolutely the same way with the double bottom reversal. However, the rules are applied in the opposite direction. Here are other examples of double top and double bottom trading strategy. We use RSI trendline breakout approach in a more conservative way. When we spot the same uptrend, we search for RSI trendline breakout signals that offer buy opportunities. We have zero interest in RSI signals indicating short trades. We go with the main trend. Let's look at the next examples. In this Australian dollars bullish chart, we noticed some RSI trendline breaks. The use of the trendline provided additional visual confirmation that a trade opportunity is near. The use of RSI trendline breaks gave buy signals a few candles before the actual move. In this another chart, we can have a representation of how a short setup would look like. We have the price making lower high and lower lows, so we are definitely in a downtrend. We added the price action trend line. Then we identified the RSI trendline breakouts. In terms of stop loss level, a common practice is to use the candle on which the RSI broke its trend line, so in the case of our short setup our stop loss would be above that candle. If you prefer a better visualization of the trend, add a long-term moving average and take trades in its main direction. RSI, like many other oscillators, is defaulted to a 14-period setting. This means the indicator looks back 14 bars on whatever graph you may be viewing to create its reading. Even though 14 is the default period, that may not make it the best setting for your trading. Normally, short-term traders use a smaller period, such as an 8-period RSI, to replicate shorter-term movements in the market. Longer-term traders may opt for a higher period, such as a 20-period RSI, or even 50. Depending on your trading style, you can lower your RSI to increase sensitivity, or you could raise it to decrease sensitivity. Keep in mind that on lower timeframes, with lower RSI settings, you will get a lot of false signals because the indicator will have increased sensitivity. So, maybe it's better to increase the value of the RSI if you want to backtest this technique on smaller timeframes. If you want a smoother analysis with less noise, go on higher timeframes. Here you could use a lower period on the RSI, which will offer more trend line opportunities, but you could also adopt a less sensitive approach by using a higher period RSI, like the 20 for example. The key is to backtest and find the best approach that works with your trading style. RSI is an indicator and just follow the price. You should be patient and wait for a clear break of its trend line. Maybe sometimes you should wait to see how the first candle acts after the breakout and after that take your trade. But remember that we only use indicators to support what we have already established with price action. An important tip is that you should not chase the trades. When you chase a trade, your entry will be at a bad spot. So, let them come to you. What is a double Bollinger Band strategy? The double Bollinger Band strategy makes use of two Bollinger Bands in order to filter entries and exits in the market. The strategy aims to enter long or short trades when price breaks above or below 0.5 deviation. The strategy can be applied to ranging markets as a breakout strategy or when assessing the momentum or slowdown of an existing trend. Now, add the following indicators to the chart. First, Bollinger Band 20 with 0.5 standard deviation. Select the default 20 SMA, but this time use the setting with 0.5 standard deviation. Second, Bollinger Band 20 with 3 standard deviation. Or you can download this system in the description below. The double Bollinger Band strategy incorporates three different zones. First, double Bollinger Band or DBB buy zone. The DBB buy zone is found above the upper 0.5 standard deviation. Presence of buy signal. Second, DBB neutral zone or 20 SMA zone. This is the center area between the upper and lower 0.5 standard deviation. Price trading in this area could be indicative of a choppy market that lacks a directional bias. Trend traders are to avoid taking new positions in this zone. Signals a slowdown in momentum or the beginning of a ranging market. Third, DBB sell zone. This zone is found below the 20 SMA zone. Presence of sell signal. The double Bollinger Band trend trading strategy allows traders to assess the momentum of an existing trend. It allows traders to exit on a slowdown nor add to existing positions when momentum and volatility increase. In this case, as long as price remains between the sell zone and the 20 SMA zone, traders can maintain the short bias. The exit point can either be on a close above the 20 SMA zone or depending on the level of risk tolerance. Those using the midline as a stop can manually move their stops along the 20 SMA zone as price downwards. Here are some examples of double Bollinger Band trend trading strategy. Advantages and limitations of a double Bollinger Band strategy. There is no such thing as a strategy that works all of the time. Bearing this in mind, traders should be aware of the advantages and limitations of the double Bollinger Band strategy. As always, if you learned something new, make sure you subscribe, click the notification icon and leave us a like to show your support. See you next time.